Welcome to The Explainer. So set the scene with me here. You're at this really nice restaurant in Bangalore. You've just finished a fantastic dinner, and the bill arrives. It's exactly 1,000 rupees. You pull out your HDFC Regalia card, tap it on the machine, wait for that little beep, and you leave, right? It feels so incredibly simple. But behind that single, everyday tap is this totally invisible, chaotic, and highly orchestrated mechanical process. Today, we're unraveling the hidden mechanics of Indian credit card transactions, and I'm going to show you exactly how this system actually works. 1.5 seconds. That is literally how long it takes from the moment you tap your card to the terminal, beeping with that satisfying green light. I mean, think about that. In that incredibly brief window, an absolutely astonishing amount of digital communication is firing across the globe at lightning speed. But let's pause for a second and really think about this. What actually happens to your money when that terminal beeps? Most of us just kind of assume, we're directly paying the restaurant and boom, that's the end of it. But honestly, if you stop there, you're missing the hidden machinery that actually funds every single reward point, every cashback offer, and every free lounge access you have ever earned. We really need to challenge those basic assumptions. Okay, let's dive into this. If you look at an old introductory finance textbook, you'll probably find a diagram showing this super simple three-party model. It basically says it's just you, your bank, and the merchant. You pay the bank pays the merchant. Makes sense, right? Actually, scratch that. This mental model is completely wrong. It's a total myth. The reality is actually a much more complex five-party system. To understand where your rewards come from, we've got to break down who these five parties actually are. First step, we've got the most obvious players. Party 1 is you, the cardholder, and Party 5 is the merchant. So in our case, the restaurant in Bangalore. Your subjective experience is literally just tap, beep, walk away. But here's the absolute critical detail you never see. You paid 1,000 rupees, but the restaurant is absolutely not going to receive 1,000 rupees. They're going to get less. To understand why money goes missing, we have to look at the three invisible parties sitting right in the middle. Enter Party 2, your issuing bank. If you're holding an HDFC Regalia, well, HDFC is the issuer. Sure, they physically printed the piece of plastic for you, but their role is so much bigger than that. When you tap for that dinner, HDFC agrees to pay the merchant instantly, even though you might not pay your credit card bill for another, 40 or 50 days? Because they take on this huge credit risk, the risk that you might just default, they earn the largest slice of the hidden fees in this transaction. This right here, this is the actual economic engine of your entire rewards program. Then we have Party 3, the payment network. Think Visa, MasterCard, or RuPay. Now, a lot of people think these companies are the ones actually lending you money. They totally don't. They are strictly infrastructure companies. Basically, think of them as a massive global highway system. The banks are the cars, and the network is the toll road. Visa sets the rules of the road. They ensure global acceptance so your card works just as smoothly in Bangalore as it does in Tokyo, and they collect a tiny toll on every single journey just for routing those digital messages. And finally, we have Party 4, the acquiring bank. This is the invisible fourth party that handles the merchant side of the equation. You probably never think about them, but they provide the actual physical point-of-sale terminal that the cashier hands to you. When that terminal reads your card, it's the acquiring bank that receives the initial request and forwards it onto the Visa or MasterCard highway. Right, so now that we know exactly who is involved, we need to completely change how we view the transaction itself. Because paying for your dinner isn't actually one single action. One transaction is actually two completely separate financial events, separated by time. We've got Event 1, authorization, and Event 2, settlement. Let's look at the secret behind the first one. Event 1 is authorization, and this is what's happening in those rapid 1.5 seconds. First, the terminal tokenizes your card. That token flies to the acquiring bank, gets thrown onto the network, and routes all the way to HDFC's servers in literally milliseconds. HDFC instantly runs thousands of fraud checks, like, is the limit okay? Are you actually in Bangalore? It passes, HDFC fires the approval back down the chain. Green light, beep, done.
But here is the truly mind-blowing fact about that whole 1.5-second authorization journey. In all that time, absolutely 0 rupees changed hands. Not a single paisa. The authorization process simply decreases your available credit balance. It's just a reservation. HDFC is basically just making a promise, saying, yes, we will cover this 1,000 rupees. But no actual money has moved from any bank to any other bank yet.
Which brings us to Event 2, settlement. So what happens the following day? We are stepping out of that fast-paced 1.5-second rush, and we're slowing things way down. Actual rupees moving is a batched process, happening T+1 business days later. And this brilliantly illustrates how totally elegant that settlement process actually is. See, the payment networks don't process billions of separate, tiny transfers for every single coffee and dinner. That would be chaos. Instead, they use something called multilateral netting. Imagine that across the entire country today, HDFC cardholders spent 47 crore at merchants using SBI terminals, but SBI cardholders spent 52 crore at merchants using HDFC terminals. Instead of sending all that money back and forth all day long, they just calculate the net difference. In this case, SBI just pays HDFC the 5 crore difference. Boom, done. This netting is exactly why the global banking system doesn't instantly collapse under the weight of billions of tiny transactions. Okay, let's bring the story all the way back to your dinner. When that massive settlement process finishes the next day, the restaurant checks their bank account. But wait, you swiped for 1,000 rupees. The restaurant only received 975. Where on earth did the missing 25 rupees go? Well, that deduction is known as the merchant discount rate, or MDR, and that tiny deduction is literally the lifeblood that funds this entire ecosystem. Now, what's really interesting is exactly how that 25 rupee fee gets divided up. The acquiring bank takes a tiny slice, maybe 2 rupees, just for providing the payment terminal. The payment network, like Visa, takes about 3 rupees as their toll for letting you use their digital highway. And the issuing bank, HDFC, they take the massive 20 rupee slice, which is known as the interchange fee. And because HDFC takes the lion's share of that hidden fee, they can easily afford to turn around and give you 10 or 15 rupees back in the form of highly generous reward points. So, the absolutely crucial point here is this. Every single reward point you have ever earned was funded by a merchant paying a fee you never saw. This is the grand reveal. Your reward points are not some magical, generous gift from your bank. They are a direct redistribution of the merchant's silent payment. The restaurant paid for your lounge access. Which brings us to a fascinating and maybe slightly terrifying question for anyone who loves maximizing their credit card perks. If this entire delicate ecosystem relies on merchants silently paying a 1.5 to 2.5% fee on every transaction, what happens when a system comes along that charges zero fees? Why is the explosive rise of zero-fee UPI the single most credible threat to Indian credit card reward programs? The rules of the game are changing rapidly, and this lucrative cycle of merchant fees funding cardholder rewards might seriously be in danger. I'll leave you to think about that one next time you scan a QR code. I hope this explainer helped you see the invisible mechanics behind your wallet. Keep learning and keep questioning how the systems around you actually work.